Welcome back. Sandeep Kalra is joining us now from Persistent Systems to get a sense of the earnings this time around. Mr. Kalra, congratulations. A good quarter, strong revenue growth as well. 4.6% Q on Q, a bit margin expansion that we saw. What led to the good performance this time around?
Let me just start by giving you a high-level color on the quarter. And this is also the fiscal year end for us. So I'll just give you a high-level commentary on that. And then I'll delve into what caused the growth and so on. So for us, the revenue for Q4 came in at US $152.8 million. This was a sequential growth of 4.6% on the quarter and 20.3% year-on-year basis compared to last year's same quarter. For the full year FY21, we came in at $566.1 million. This was a growth of 12.9% over full FY20. In rupee terms, this growth was at 17.4%. Not only did we grow on the revenue side, on the EBIT side also, we grew to 13.2% for Q4 and 12.1% for full financial compared to 9.2% for the financial year 20. Now, back to your question in terms of what led to this growth. So over the last 4-5 quarters, we have seen a significant ramp up in our larger deals. We've won a number of large deals, which are now kind of fructifying in the ramp ups, etc. And that's led to sequential growth for multiple quarters for us.
Okay. Now, you did mention that you have a strong deal pipeline. Let's talk about that as well. The kind of nature of large deals that you're looking at across which verticals, perhaps healthcare, BFSI, tech, and geographies as well. Give us a sense of what's coming up.
Sounds good. So from our perspective, look, we work in 3 different industry verticals. For us, the industry verticals are technology companies. These are software product/platform companies. Second vertical is banking, financial services, and insurance. And third is healthcare, life sciences. For us, it has been a broad-based growth across these 3. In the technology companies, we have been working with some of the largest tech companies to some of the unicorns, helping them build the next generation of products. Or in some cases, for the larger product companies, modernizing their products and doing things like certification, etc. For banking, financial services, the theme is more about doing digitization. So more and more products are being launched on the digital banking side. We have even worked with some of the neobanks in helping them launch digital banks. For established players, we have been working on application modernization, security, regulatory compliances, and so on. In the healthcare space, we've been working across patient engagement. In these times, a lot of things, even in the US and in other markets, a lot of things are moving towards virtual care, virtual clinical trials, and a lot of those kind of things. And even on the instrumentation side, in the healthcare space, we have worked with some of the leading players, helping them build products for the COVID era and beyond. So those are the themes that have led to us winning larger deals in each of these segments. And we continue to see a secular demand for our services in these segments. And we have delivered, if you look at what I just said, last quarter for us, year on year, we have delivered about 20% growth. And we do see the momentum carrying forward. So that's the kind of landscape we are dealing with.
Right. Sandeep, bulk of your revenue contribution is from North America, and you have a presence in the BFSI space there. How is the demand environment there? And also, are you seeing any changes in the demand environment, in the second wave versus the first?
So from our perspective, look, number one, you rightly pointed out, Americas is about 80% of our revenues, and we are seeing significant momentum here. And, the momentum actually started in the earlier part as the COVID, the wave 1 was going through. And we have not seen any respite in the demand. It's been a decent, spate of demand. The COVID second wave, thankfully, is not that bad here in the US as compared to, places like India. So from that perspective, we have seen a steady flow of demand. We are seeing the same kind of demand for, products and services in the digital space. So we remain very bullish in terms of the secular demand from here. And even places like Europe, we are seeing slight more uptick over the last few months, but it's yet to be seen. So that's where the demand scenario is like.
Sure. Sandeep, also your EBIT margin, which stands at about 13.2%, that expanded a good 50 bips on a sequential basis. What led to this kind of expansion, especially in the light of some costs coming back and also your hiring costs as well? And in that context, then, what's the outlook on margins for FY22?
So see, as a company, when we look at it, we have got the good tailwind of revenue growth with us. Given that and given the other company specific levers, so we have certain levers that we can exercise, which are cost optimization in our IP business, things like utilization. For us, we have been on a good hiring spree for the last 2 quarters. In the last 2 quarters, if you look at it, quarter before we had hired about 1,600 plus people. In the last quarter, we had about 1,242 people. So there's a certain amount of utilization that dipped in the last 1-2 quarters, which again is a lever for us as we go along. Some costs may come in, but these levers are there. So we are relatively confident of our margin trajectory. And there's also some amount of amortization on certain deals that we had done earlier that will go away from the next quarter. So overall, we are comfortable, with the same margin profile going ahead or a little better.
Right. Now, most of the players have stated that they are confident of double-digit growth going forward. Can we expect the same from Persistent Systems? And can you give us some sort of a guidance as to what we can see on the FY22 revenue growth front?
We don't give forward-looking guidance, but look at it this way. We have delivered 12.9% for the year. For the last quarter, we were at 20% for the same quarter comparison year before. And from our perspective, we are very confident of double-digit growth. In fact, we would say we will be in the top quartile of the industry growth. So from that perspective, we should be in the range of 3 to 4.5% every quarter. That much is what we can say as of this point in time.
And the attrition is rising across the industry. How has it been for you? What are your hiring plans? What are the wage hikes that the company plans to roll out?
So as far as attrition is concerned, our current attrition for the trailing 12 months is in the range of 11.7%. But we were the first ones in the industry about 2 quarters back when we hired 1,600 people. We were asked the question about why are we hiring so much? And we had said that we are hiring to take care of demand. And we also anticipate that the attrition will increase, given that not just us, many players in the industry are doing well. So from that perspective, our hiring plans remain strong, and we will continue to hire both for making sure we are doing the demand fulfillment and also building the capacity to take care of any future demand and any attrition that goes in. From the other perspective, if you look at it, the demand for higher end skills is going to be even more under pressure. And that's where you will see a little bit of talent kind of, war, if you may say so.
Okay. Finally, talking about the deal pipeline once again, what led to the lower TCV of deals in Q4 versus Q3? Is there some seasonality that's come into play there?
So Q3 happens to be Q4 in the US. So that is the fiscal year ending for the US companies. Q4 for us is basically the starting quarter for anyone here in the US. And as you pointed out, US is about 80% of our market. That way, traditionally, Q3 is the time when we see the highest bookings in terms of renewals as well as newer deals. And then it, kind of goes down a little bit and continues from there. So I don't see this as an aberration. In fact, if you compare our annual contract value, we have booked in Q4 is $200 million. Our revenue for the quarter is $152 million. So we have been consistently doing a reasonably higher amount of bookings than what we consume in terms of revenue in the quarter. So we are very bullish about what we have at hand. And these deal flows will keep going up and down. You build a pipeline, you close the deals, and then you move ahead. So those trends are fairly comfortable, and we are pretty confident of the growth based on the order bookings as well as the pipeline.
All right, Mr. Kalra, we'll leave it there. Thanks so much for joining us. Good speaking with you on those earnings.